This is the stock market analysis. We're going to look at projections on the S&P 500, but first, this important information. Please do read this slide. It tells you about our approach to analysis in the market and about you using the information that we provide and the important aspect of trade ownership. You must own your own trades, no matter what anybody says to you. Well, for the stock market this week, indexes sold off hard. They were down just about 2% to 2.5% after Friday morning's bounce. And Monday was the worst day. It just gapped down huge. Recession fears are growing. S&Ps were down over 200 points at the worst level. The Dow down over 1,100 points. They only recovered a little bit off of those lows. And those recession fears, well, that's what happens with government austerity. And that's what we're looking at as what was a big pump in the economy, a big pump in the stock market since the COVID situation. Now with the government being pulled back in size, well, all of that is going to be gone, and the stock market is going to have to go through a corrective reset in here, and we think that is what's starting. Inflation numbers, they were below estimates. Remember, anything that's going on with tariffs are not in those numbers yet. We had a good CPI. The stock market tried to soar on the upside. On that news was up 80 points for the S&Ps, and that failed. And the PPI was better also than expected, and not even much of an upside try right there. S&P 500 hit the 10% correction numbers on the downside, while the NASDAQ worse, as it had fallen down as much as 13.8% from its peak. XLK, that's the ETF on the tech stocks, that was down 15% from its peak. And if you look at just the semiconductor stocks, the SMH down 22% from its peak. So some of the techs are already in bear markets. And if you look at a lot of the tech stocks, they're down 30, 40, some as much as 50%. On some just incredible downside moves after getting incredibly overpriced. Gold surges, and that continues, up about $90 on the week. It had a high of $3,017, and our members can see where our next target is on the upside because we put those updates in there for members. Silver also a solid gain, up 5.4%. That's what moved the markets this week here on March 14th, with this report right now coming at around midday on Friday. So we're going to look at the stock market here. We're going to look at intermediate and short-term charts. We'll look at the Dow Jones Transportation Average. I think that's an important one to look at, and I can give a good lesson on cycle analysis on that on those charts. So I'm going to do that. S&P 500, NASDAQ, we'll look at the mid caps in there, the MDY, and that's multiple time frame analysis with our cycle analysis on there. And we'll look also at our level 4 indicators and our market condition monitor, which is just an amazing application. And that is available with our level 3 special that we're offering this week. So you can look at the that promo that we have in there for how to sign up for that at that big discount. So let's take a look here as we look at the stock market. So I'm going to switch over right now and look at the chart on the DJT. That's Dow Jones Transportation Average. And we're looking at weekly here. We're looking at daily, and I have a 2-hour chart on there also. So let's take a look as I look at these charts. So we'll blow up the weekly here, and I'm going to give a little lesson on cycle analysis in here. It's kind of a busy chart. You know, some people look at our charts and say, wow, there's too much on there. But once you really get to understand what we do, this will really feel like fantastic information for you. So what I want to show you in here, first on the bottom, are cycle brackets. That's a drawing tool, and that just helps us as a guide to see the cyclical rhythms in the market. Money flows is what that is, and the longer the duration of a cycle, in this case, we'll just call that an intermediate right there and a minor cycle, and each one of these are harmonic family. Each one of these are really longer holding periods when you look at that. So we'll take a look and see the rhythms in the market. You can see this upward movement in here as the cycle and money flows give you higher highs and higher peaks, higher troughs, in there, and then once it starts to break that cycle level like right in here and fail, that's what makes a head and shoulders top. And you see that head and shoulders in there that made that peak, and we actually have a little one going on right over here right now. So what's important is looking at what we call translations and configurations. The translation in here is very positive, the configuration being that higher peaks and higher bottoms. Translation meaning where does the peak come in the actual cycle. As you can see there, this was about halfway through, and it rallied and gave up the full amount there, so that's probably what looks most like an ideal cycle shape. But then when a cycle breaks the important low right over here, it sets up a bearish condition into the cycle trough. As you see, bullish cycle, neutral cycle, bullish cycle, bullish cycle, all of those as we're looking back in here all the way into 2020. So you can see the beautiful repeating patterns that we have in here. Let's look at where we are right now. So the first thing is that you can see that yellow ovals and green ovals. This is where the rising phases start, and help comes from our reversal scout when it turns up here and turns up here and turns up here. It tells you we're in the rising phase of those cycles, and when it turns over into these corrective periods, those are those yellow ovals right over there, and tells you that's a corrective period. So you can see this positive cycle right over here as it made a new high and then came down. Now, when the next rising phase fails here, this was about a little over halfway back up, then what you see is that it sets up some risk. And once it breaks this support level right over there, the last cycle, it tells us that there's a decline going on that is likely to continue until the bottoming time period over here. Now, if I look at the dominant cycle here, that tells me that bottoms right around the beginning of August. This next one over here around the beginning of right around late July. So late July to August is where this is. And this minor one over here bottoms sometime in April or May right there. We're looking for actually the stock market to decline into May or June. So that makes sense to me when I look at that. So this is a very negative condition in here. And it says that rallies in here are likely to fail, and that while there's a minor bottom in here sometime April or May, that rally would come and then it would likely fail again and fall out into the July-August period. So this is a very, very bad picture. Momentum in here is negative, and the cycle patterns, as you can see, incredibly consistent when you look at that. And what that tells me is that there is trouble for not only the transportation stocks, but it's an indication of problems for the U.S. economy. If you want to get our information on cycle analysis, go to askSlim.com to the workshops tab on the top. There's free videos and free information there, so you'll be able to learn more about this style of analysis. Let's look at the daily chart now. And you can see in here on the daily chart, while we are looking for the market to be in bad shape, right now we're in this bottoming time window right over here. And the market not really able to get an uptick here with the stock market, which is trying to rally here on Friday. But this is where we would expect the bottoming to begin. On the right over here, you can see where the momentum resumed to the downside right there. I'll just get this in a little bit tighter. And this in the bottom here is known as the slim ribbon PO. That is an indicator that's for level 4 members. And you can see when it was green and positive, giving you upside momentum signals, the value of that. And right over here, it gave you a downside momentum signal, and it's still red and negative, a reflection of the slim ribbon that's right in here. And the bottom warning in here, this is our option bias indicator. You can see in here where it was orange and giving you top warnings and how good that was. So now you're getting the bottom warning. This is an indicator that tells you momentum. So keep your options biased on the short side, as you see right over here, and it gave you a little whipsaw right there where it tells you, well, you could look at the long side here, but that didn't last long, and it immediately got negative again. But now it is oversold and telling you it's likely going to give you a bounce in here. It may only be a few days. And if I look at this harmonic right in here, remember I said out to April, May? Well, that says that joining the weekly chart, that this rally is likely to fail in resistance. Once I have an anchor point here, I'll put the resistances in and then begin moving down again. So this is pretty much in alignment with the overall stock market picture I'm going to show you. And this is just entering this bottoming window right in here. Well, it actually entered it a while ago, but it hasn't given any signal, and the first signal would come from the 2 hour. So this is the 2 hour, and you could see the slim ribbon negative in here. Look at these. If you were a trader in here and you said, I need a directional bias, I need to know how to make my short-term directional decisions, the slim ribbon PO on the 2 hour chart is phenomenal, as you see right over here, giving you each of these negative, first of all, it's red, which is negative, and each of these downside resumption momentum signals telling you negative. Until this turns green, you don't really have a sign of a bottom going on in there. So the Dow Jones Transportation Average overall is giving you intermediate, very negative signals, short-term negative momentum, but in a bottoming window, and the 2 hour not giving you the signal yet, but that will be the first one to give you the signal that the market is bottoming. So I wanted to show you this very negative condition in the Dow Jones Transportation Average. Let's take a look at SPX, which is the S&P 500, and we'll break it down the same way. So again, I'm looking at the weekly, the daily, and the 2 hour. The 2 hour, on this one I have a lot more information, so it's really interesting. You can see in here, as we look at the S&P 500, let's just look at these last 3 cycles. Now you can see in there, this went from a very bullishly configured cycle to another very bullishly configured cycle. Translation's amazing, where you only had peaks with 3 weeks left to go in the cycle from very minor corrections. And this one here rallied to a new high. Our target for the upside for the year was 61.75 to 6,200. It got up to 61.47. And I am saying, if you look at the analysis I did earlier in the show, which gives you a big picture of the stock market with the longer term charts. And please, if you're watching a clip, go back and watch the whole show and watch that. There are indications that the stock market has come to a major peak, and that might even be the high for the year. Now, lots of people that think there still has to be a blow-off top will argue with me. I'll tell you, we've seen a blow-off top when you get to 207% of GDP. What would a blow-off top look like? Everybody's looking for that. I don't think you're going to get it. I think you had it already. Now, there's a period out over here in June where this bottom should be forming, and then begin to move up again. If there is going to be a good upside spike in the market, it's probably there. Right now, I'm going to show you on the short-term chart, we're likely to get a bounce, but you see all of this time frame in here? This takes you out to May or June before this downside is over with right there. Momentum in here, it turns negative there, so you have negative momentum there. These are confluence of support. So in other words, the 61.8 here to here, that's measured from this trough to this trough, because not exactly sure where that support zone is going to be. So we give it kind of a wide numbers in there. And these are the important 78.6s right there. These are the monthly supports there. And we're anticipating that this decline in here, at a best case, is down to about 5,400 in the May-June period, potentially down here to 5,100 in the S&P 500. So rallies in here are very likely to fail and begin to move down again. So we have that negative momentum, negative cycle as it broke this level right over here, that important level, that we had put in here a while ago, and this downturn in momentum. That's bad. So here we are looking at the cycle patterns in here. For those of you that are students of cycle analysis, this is a phenomenally interesting, because cycles overlap each other. Consider, looking at, the ripples of waves when you're standing at the shore of the ocean, and you see the movement coming in. Depending on the energies, each of the ripples have a different size. And that's what this is. This is like the ripples, the energetic ripples of the ocean, or it's like music because you have minor thirds, as you can see right in here, and the dominant cycle. This dominant green is actually the mid caps, and I'm going to show you that in a moment. We targeted this time frame quite a while ago as how long this declining period would last. So we are now in that bottoming period right over there. Again, we have the option bias indicator giving a bottom warning. This is extremely oversold. And if you watch that piece that I did earlier in the show, I show you all of the stocks that are the widely held, that are in this condition, that are very likely to get decent sized bounces on the upside. So it's important to go watch that part of the whole show that I did this week. Here is the support levels right over there. 55.08 is where that is, and you can see we got almost right down to that. This is that monthly support that I showed on the weekly, and here is another support over here, 54.03. This rally that we have today could fail, and it could go down and make a lower low, or it could begin the bottoming process in here, and that would be told to us by the 2-hour chart. So let's take over here and look at the 2-hour chart. This is such an interesting chart because what it has is the dominant cycle right in here, and the minor thirds that are right there. And you could see a minor third here, a minor third here, and a very weakly translated minor third right over there, which basically got up into that little resistance area and then sold off. What you can see in here, I'm just going to add some more bars on the right so you can get an idea of that timing window. I'm just going to put that in there. And you can see in here that we're coming up to this on the 2-hour chart, the bottoming period right in here. Again, we don't know if it's ready to bottom yet. And this is a great look at how you look at the minor cycle within the dominant cycle. So here is your dominant cycle right in here. Here are the minor cycles that live within the dominant cycle, and both of them getting to a period where they will soon turn upward in here for that bounce that we're looking for, that oversold bounce. Here you could see this is our market condition indicator on the bottom, and once, when it's up here in this green area, the market's in really good shape. Here it tests the swing zone, as we call it, between 25 and minus 25, and once it really breaks it, then you're in negative conditions right there. So you can see in here, look at this slim ribbon PO right here. Each of these telling you stay on the short side if you're a short side trader. Now, 2-hour chart is very valuable for intraday or short side traders that may trade swing trades for a few days, because this tells you about your directional decisions. Once this turns green in here and tells you this bottoming is going on, then you can start to talk about trading on the long side in a very small way, because again, you're fighting against negative conditions that exist in the daily and in the weekly. Summarizing that, weekly negative momentum, declines likely out into May, June. Daily negative momentum, but getting into a bottoming phase that is unproven. And here on the 2-hour chart, still in this downward trend that you see right there under negative conditions. This needs to be the first one to turn green to tell you that the market conditions are changing. A bounce like we have today of the stock market up 75 points on the S&Ps, you could see where that is right here. It's minuscule. It's meaningless. It doesn't mean a bottom is in. It just means to us that it's trying again to get a bounce. It's going to take some work in here to be able to get an upside move, and when that happens, this is the zone that it's likely to get up to. So we'd be looking for a bounce. If we don't make a lower low, this is about 57.50 to about 58.25. So that would be kind of where these gray upside arrows will be. That'll be completed and a target up here once we get a low. The reason that they're gray now and only little arrows like this is because we're in this bottoming area, but we don't know if the bottom is in. We just want to let you know that that's coming, but that's why it's gray. What's happening here is in red and really tells you the condition. So we have this really figured out in here, how to have the proper messaging for our members, and I'm sharing that with everybody right now so you get a good idea what we do. Let's take a look at the NASDAQ, the NDX. And the story is pretty much the same. Negative momentum, breakdown right in here, gets into the 61.8% and gives you this bounce in here. The daily is going to show you a likely bounce right in here that we're going to get once this bottom is set. And again, these declines go out into the May-June period. The most optimistic is probably right over here, 18,100 to 17,800, with a potential of getting down to this level right over here at 16.3. That's somewhere out into the May-June time frame. Again, this is a very negative setup. Cycle is broken. Momentum is on the downside. That means that rallies on the short term are likely to fail. This is an intermediate term chart that you can see right there. Here is the daily chart right here. Let me just go back, and you can see again, on just like we said on the S&P 500, this gets into the supports from the weekly here. There is likely to be a bottoming in here, but momentum very negative. And again, this gray arrows are telling you bounces from this area. Excuse me, and were that to happen without making a lower low, then the bounce target would be like 20,300 to 20,700 in that area, but then we would expect it to roll over and move down again into that May period or June, as we see here. Again, this is the MDY cycle, which has really been a dominant force in here. We're getting a lot of messages for that, and the minor thirds and minor halves, how they line up. Look how the minor half made its low here, made its low here, syncing up with the other cycles, made its low right over here, and that's coming up right over here. So this rally is likely to come. Bottom warning in here. It's extremely oversold right now, so likely to get a bounce, but it could be a very choppy bounce. Let's take a look here at the 2-hour chart. You can see in here it's been in this downtrend through the point in here where the reversal scalp turned over. That's the red dot that I'm illustrating right there. And look at this, the MCI turns negative, the market condition indicator giving you these negative readings. The momentum resumption signals are these red arrows, and when it's red, the slim ribbon is red. This is just incredibly good information. This is still red, and if anything, this will turn over and give you another downside arrow. We hope not, and we hope what happens if it does that, then it won't make a lower low and then move up through this downtrend line and turn green. That will be the signal that the stock market is ready to move up. One more chart I want to show you is the MDY, because I've been using that as a guide because it's been so powerful in here. And you can see in here the MDY on the weekly chart is looking like it's going to make a bottom a little bit sooner than the stock market. So it could make the bottom right over here, or it could make the bottom a little bit further out if there's another cycle on the daily chart that takes you somewhere out over here. We don't know for sure how that's going to come up, but because the stock market overall looks like it's going to go down into the May-June period, I have doubts that the first low is going to be the important low. It's likely going to be the second low. How does that time out on the daily chart? Remember here, we have the breakdown here to negative momentum. We get below this low. All of that is negative. So how does it look on the daily chart? Well, that next cycle right there comes out to May 10th. So I go back to the daily chart, and this arrow right over here really needs to point somewhere right out over here. So that means these cycles could be potentially widening. We're going to look at both of those potential lows. The first one coming up right now with the rest of the stock market, with the momentum, of course, negative. Bottom warnings coming in here. We had 6 of them as the market has continued to churn its way down. It's tried to rally. It hasn't been able to yet, and you're not really getting an uptick today. I mean, this is a very small uptick. It's 8 points in the index, so not in great shape looking at that yet. And 2-hour chart, you can see the same information, really super negative, and the likelihood that we're going to get to a bottom soon, but unless this turns green, it's not really going to be important. What'll be interesting is that this will turn green, probably start to move up. Our market condition indicator on the bottom, which is at -100, which is as bad as it gets, tells you that doesn't give you overbought or oversold. That just tells you the conditions are bad and that there is longer term selling going on when it gets down to that -100 area. So that's a really bad sign. So that's the MIDI, and that's telling you breakdown over here, bottom coming now, and then again out in sometime in May. And this one may bottom ahead of the rest of the stock market. That is a possibility. And overall, not great conditions. So that's a look at the charts I wanted to show you. Now we're going to look at our MCM, which I think is very telling when we look at that, and I think it's great information. Let's take a look at first our special. Talked about this in depth earlier in the show. If you want to see the vast majority of the content that we provide, it's in level 3. Fantastic information. It's 35% off right now. It only comes out to $77.33 a month for the 3-month period, $232 total, and that you save from $119 a month. So a great deal. Write to Matt at askSlim.com if you have any questions on that, or go to the top of our website and click that area right there where it says special offer, save 35%. All the information is there, and a sign up link if you choose to take advantage of that discount. All right, let's take a look at our market condition monitor, the MCM. This is a fantastic application for level 3 and level 4 members. So this is included. You can essentially dial in the style of trader you are or the time frame that you want to look at. So here I'm looking at short term, and I'm just going to look at the 4 indexes right there, and you can see that SPY, QQQ, IWM, the Dow Jones, DIA, there's bearish or very bearish in there. And these, on the short term, you can see these down arrows, which means the last change, like in QQQ or IWM, went from down to very bearish from bearish. And this went from slightly bearish to bearish. So these readings in here are just very negative. Like I said, it's going to take some work to change these. Once this short term right over here goes green, right there, you will then be starting to see some changes in here. But the rally that we're seeing so far today is not enough to do it. Let's take a look here at the intermediate, and you can see what we're looking at is they're slightly bearish to bearish is what we're looking at. And the reason for that is because the longer term indicators are still holding up, but they're going to change in here pretty soon, and that will downgrade these again. But we'll see how we do on the short term coming up. If you're an intermediate, if you're a near-term trader, which is just for a few days, you can see in here that the rally today has started to neutralize things in there, but that's only for those people that are swing traders for a few days. And intraday is only available to level 4 members in there, which gives you down to the 3-minute chart. So let's take a look at the short-term conditions right now. And you can see the setup conditions, and we'll take a look at the stocks that are in the best and the worst shape. I think that's important to look at right now. So here are the stocks that are very bullish, and you can see in here RTX, gold, PAS, which is a silver stock, Chinese stock BDU, and of course gold miners, the junior miners. Those are the ones that are very bullish and have been giving you very strong readings. By the way, when something changes, it goes into the change log right there. So you can see that silver is very bullish, SIL, SILB, copper is bullish, and those are the ones that have been doing well. Of course, China and the gold stocks are the ones that really have been doing well in this market. Now, when I look at the very bearish ones, I'm just going to scroll down here and you get an idea of those also. So the ones that are very bearish in here, KRE, the banks, Taiwan Semiconductor, AMD, XOP, XLE, that's the energies, Amazon, EWC, IGV, PayPal, CRM, India, the OIH, which is the drillers, EWT, First Solar, VLO, ITB, soybeans, TAN, which is the solar stocks, XHB, Lowe's, MGM, XRT, it just goes on and on, IR, QM. And you can see in here the dates that they turned very bearish, from bearish. They went from bearish to very bearish is what's in there. And of course, you really want to have this application. It really helps you. And if you want to know which ones are changing, you just click the notify right over here. You pick it and you download our app it's a desktop app that will notify you when these things change. That's really important. So I wanted to show you the bullish and the bearish in there, and seeing the stock market also, you get a good idea as to where we are right now, short term and intermediate term right there. If you're you can choose your trader type right over here, or time frames. So this is time frames, and here you can choose 2 hour or monthly, weekly, daily. And this is just a phenomenal application, which I really encourage you to get by signing up for our level 3 special.